Hi everyone, this is Michael Benkiat with Lifetime Investor, and this is the Market Trend Advisory weekend video for November 25th, 2022. Hope everyone's had a good Thanksgiving, and let's go ahead and get straight into it. Here's our disclaimer, check it out. And here is the Market Trend Report summary. So we are basically at full exposure. The market count is 5 out of 5. So our market exposure is 100%. It's been that way, I think, all week. We basically have green lights except for one area, which is the individual stocks and non-index ETFs. We're just not getting a lot of leadership or performance out of the leaders, which is a little strange. What's still happening is a lot of the action is coming, of course, in the indexes, especially the Dow. And we're getting a lot of the old tech leaders and the former leaders all rallying again. I think we didn't do a video last week. Week before that, we showed a couple screenshots of many of these names, and they were just up huge for 2 days in a row. So the money's piling back into the old leaders, which won't be the new leaders of the next bull market, which whenever that starts. If we've already started it, we don't really know at this point. But so that's where we are with the individual stocks are just not leading. We're not getting a lot of action. So that's what I wrote in the notes. That could be maybe the canary in the coal mine. We should be seeing more leadership, and we just are not. So that's a kind of a red flag for this rally. But aside from that, we're really getting some powerful moves in many of the indexes. Let's take a look at the investing strategies. They are improving. For our QQQ, we're using our market count 1x strategy, and we're soundly beating buy and hold for QQQ, and better performance too for SPY versus as a SPY buy and hold. So let's take a look at the indexes. So the Dow has been greatly outperforming. I think we're only down about 6% now from the 2022 highs. So really, this is just kind of blasted through all of its major moving averages. We didn't even get any resistance at the 50-day, which is this red line, which is now turned up. It hit it one day, and then this came flying straight through it. The 200-day is this black line. We did get a little resistance here. We kind of and support. It broke below, but then it just came roaring right back, and it's just taken off. We've even taken out this high from August. So this is really acting well, but you have to put it in context that the Dow is only 30 stocks. And I think they are actually, I think it's cap weighted. I have to look that up. I'm sorry, I don't have that right to hand, but it's only 30 stocks, so it doesn't really represent, a lot of what's really going on. But those names have been the recipient of a lot of money that's come flowing back in, so it's done, quite a bit better than the other indexes. So here's the S&P. We have broken above the 50-day, which was a little bit of resistance. We had a little battle went on for the 50-day. Again, that's this red line. We finally broke above it decisively. We had a follow-through day on that day. You can see it here. And this last week was kind of a, for a few days there, we just kind of weren't sure what was going to happen. And then the market decided it was going to take off. We're, I think, within 1% of the 200-day. Now, the 200-day is still declining, but it's starting to level out. And the 50 is just starting to turn up. So we're getting a little bit better action there. And, of course, this is going to probably try and, almost without fail, it's going to at least hit it and maybe see if it can surpass it. Now, back here in August, we actually just hit it on one day, closed down a little bit that day, and then that was the end of the rally. But the picture right now has gotten a lot more bullish, maybe a little too bullish too quickly. But we'll see what happens with that. So this is looking pretty good. The NASDAQ is actually the weakest. Again, it's a lot of the names that are in this are the big mega caps, which are really not performing well and probably have their best days behind them. And so we're just really not getting a lot of performance. We've gotten support at the 50-day, which is still declining. The 200 is still declining, but I wouldn't be surprised to see this make a run up to about 12,000, which is where the 200-day is. That would be another about 750 points, 775 points higher. So we'll see that, but they're all looking pretty good. I mean, this is a little bit weaker, but and the volume's been below average for really the last 7 days or so. But we've had some strong updates we had 3 here you can see, which is giving us a lot more institutional buying days, which we don't really talk about that much, or follow through days. And so this is actually showing that the institutions are coming back into the market, not heavily yet, but they are improving from what we hadn't seen any of this for quite a long time. Finally, I want to look at the Russell. That's the small cap index. It's come right up, and I think it just closed right above its 200-day moving average. So it's acting pretty strong too. Now again, all these indexes, they're still in downtrends and still really in bear markets. So you're going to start seeing a lot of noise coming out, especially with the Dow, that we're very close to being in a bull market again. But the overall conditions are really not conducive for the market, and so I think it's best to look at it all in the context of an ongoing bear market until we're proven wrong. As we've talked about many times, there's been a lot of very, very strong moves in the market during bear markets. We've even seen up to 50% moves within a bear market, if you can believe that, back in, I think that was in 2000 to 2002. So, there's a lot of tailwinds for this market to just go ripping up back into new all-time highs. Seems very unlikely, but of course, anything can happen with the market. Let's take a look though at some of the technicals, which have really, really improved. So you can see here just a percentage of stocks with the 200-day, is getting close to 50%, which we have not seen in a long time. I think I wrote in the notes that this is the highest we've seen I think it was since January. So you can see how poor this was. And that was one of the tip-offs of what was happening in 2021, is that we were seeing the indexes going higher and higher, and we were just seeing this drop more and more and more. And this went down to, I think, about 18%. And so that was just really telling us that while the indexes were going up, it was being held up by the big generals, the Microsofts and Alphabets and the big stocks. And yet most stocks were just starting to fall off and went into bear markets. Now, some people have argued that, well, we already had the bear market. We've had the wipeout in tech. How much more is this going to go? So we don't know that at this point, but we'll be seeing. But this is a great improvement from what we've seen. The 52-week high and lows really hasn't improved much. I mean, we had just an exact parity on Friday, but we've still been the lows have been outdoing the highs for much of the last few months. So we'll continue to watch that, but it is slowly improving. We might start getting a couple days or more of seeing the 52-week highs outpace the lows. In terms of the NASDAQ, we're back above the 50, which is a big improvement. I mean, you can see here we were down 6% just on the 9th. We're up now. We're starting to come way back. I think the NASDAQ was down like 16-17% below its 200. We're getting closer to it. Now, the number of growth stocks that have recent breakouts and hasn't failed, this is kind of tied into what we've been talking about earlier about the individual stocks just not performing. Now, there's been a lot of just strange behavior here. While the market was just wasn't really taking off yet, we were back here in the early part of the month, this just shot up to a 90, which was one of the highest readings, and here's 96 on the 8th. Highest reading we've had ever. It seemed like there were just a ton of stocks all breaking out, and which we normally would think that's fantastic, but it wasn't supported by a lot of the other data. And then you can see here how quickly, as the indexes have come right back up, which we've now dropped down to 26, and you can see just from the color coding, we're starting to even get into the red. So very odd behavior. I'm still not quite sure to make of it. I think what was happening here maybe is we had a ton of stocks that were gapping up on earnings. and especially there were also a lot of energy stocks that sort of gapped up. But one of the reasons, as you can see, they're just not holding, and that's one of the big issues that we've seen. Most breakouts only last a couple days, and then they tend to fail, or they just don't go anywhere. And so, really, it's not showing the institutions are really stepping up. As more retail is kind of popping up some of these stocks, you get maybe 2-3 days of breakout, and then sometimes just huge reversals, or just they don't go anywhere. So the number of stocks that have really kind of broken out and kept going is very, very few compared to the whole universe of stocks. So that's a big warning sign, and we're starting to see the divergence again here to the downside. Now in sentiment, this is also greatly improved, maybe a little bit too quickly. We are starting to see the VIX we've talked about this before. It's been solid red for so long because the VIX is normally 20 is sort of a top in normal times, and then we would get down to 15, 16. When we get down to like 12 or so, we're getting a little overheated. But we've been above 20 and into the 30s for just months and months and months. So we haven't changed our color coding on that, but it's been a little strange. So it's just been solid red for a long, long time. But that's just telling you how unusual these circumstances are we've had in the market for such a long time. Now, we've seen the CNN fear greed. This is now solidly up in greed territory. And we're also seeing that with the put call has come way down, the weekly investors intelligence, bulls and bears. This has gone neutral to actually a little bit of almost a little bullish, though we're still keeping it on neutral. But we're starting to see all this really just increase to the point where it's getting a little frothy. I mean, I think this has really just come up a little too quickly, too fast. And we're also starting to see, I think we talked about on the notes, the Dow is getting to a level just in its move that is really almost unprecedented and is really ripe for a pullback. So let's if we wrap it all up here, I think the market's really come a long way. I would still argue that my personal opinion that most of this is unwarranted. The market seems to be going up because it's sensing that, or it's anticipating, discounting that the Fed's going to pause in its interest rates hiking program. But that's an obvious. That of course is going to pause at some point. It's not going to go from 0 and shoot it up to 20%. It's going to pause, see what's happening. But the market seems to have been, again, looking at that as like that's really the end of this whole thing. That's going to be, everything goes back to good times. The Fed's, they're already talking the Fed's going to pivot back to cuts. Well, that doesn't look likely at all. And if you even listen to what the Fed governors have been saying, and Powell, they're like, no, we're nowhere near that. We're just, if we do anything, we'll pause, see what happens. But the market's, seems to be just pricing in. It's just good times ahead. So, the market's not always right. It will eventually discount everything, but the big question too is what's going to happen with a recession. Because if the recession happens, then that kind of pushes the whole picture out. The interest rates will probably stay higher for longer. If there's no recession, which is sometimes what the market's sort of corrected enough where if there's no recession, we probably seen a bottom, but if there is a recession, very likely we're going to see a new low. So just to wrap it up, we're still in this big indecision mode, lots of cross currents. On one hand, we have 100% invested in the indexes, and the other hand, we have very little invested in individual stocks. So, if you're just a strict index investor, you should be invested accordingly. If you're, invested more in individual stocks, just caution is the byword. In our stock picks service, we've just every time we've put on positions, we're getting stopped out. We've had, very little action for most of the year, which has been really the correct thing to have done. It's kept us out of trouble, and that's part of navigating a bear market is just not losing. So we've done pretty well in that. So we'll see. This week coming up, there's a lot of data. I think by Friday, we'll probably see a big move one way or the other. I wouldn't be surprised to see the market just blast off again. But Powell may just decide to step in and kind of cool the flames. He doesn't want a big rally going on that works counter to what he's trying to achieve. Another big rally and the greed coming back in, and it just sends everything back up. Wealth effect increases, and that just ultimately leads to more inflation, which he's trying to stop. Okay, well, we'll be back next weekend with another video, and we'll see what it brings. Okay, thank you.